Hey, it's Michael Tiny Saul. This is the market autopsy video for the week ending Friday, November 23rd, 2012. Hope everybody had a wonderful Thanksgiving. Let's take a look at the economic reports that are due out this next coming week. So on Monday, we have the Eurogroup meetings all day. On Tuesday, we have the core durable goods at 8:30, the Bernanke, notice Fed Chairman Bernanke speaking at 8:30, and consumer confidence at 10 a.m. Then on Wednesday, we have the German preliminary CPI, M3 money supply. Those are early, though. New home sales at 10, crude oil inventories. Tarullo speaks, no respect. He's only rated a yellow. And the beige book at 2 o'clock. That's on Wednesday. On Thursday, Italian 10-year bond auction, preliminary GDP quarter-over-quarter, unemployment claims, pending home sales, and a couple other minor reports. On Friday, German retail sales, French consumer spending, CPI flash estimate, unemployment rate at 5 o'clock in the morning. That's in Europe. Then you have the core price index, personal spending, 8:30 in the morning. Chicago PMI at 9:45 a.m. And then Stein speaks in the evening. But the week will be over by then. So let's take a look at what happened this week in the market. Now, it was a short week, this past week in the market. Now, it was a short week. It was only 3.5 days, and I don't even know if you could count Wednesday as a real day. Look at how narrow range it was. I mean, it's still traded from 9:30 to 4, so it's definitely a real day. But Friday, which only traded 9:30 to 1, had a big range, and a lot of this was done into the end of the day. You could see here, this is basically after-hour stuff. Even, I don't know what these are. These are just bad prints. But, computer thinks that Friday was still going till 4 o'clock, but it ended right here. And you could see here, gap up, went up there, congested, and then ran it into the close. So now we have 4 days up after, and then actually 5 days, including the reversal candle back here on the 17th. And we were looking for a bounce here. And what I had said last week is I thought it would be a low. I just don't know if it will be the low. And I'm still holding that right now. All right. We are back above the 200-day moving average, back above the 20, but we still have to get above the 50. And this swing high, in my opinion, in order to get back into the, hey, we're going to go back to the highs. Now, I capitulated on that last week. I said, all right, I'm coming off my, I think we see new highs into the end of the year. But I did say that I do think that we could rally into the first quarter of the year and take out these highs. But if we get above this 50-day and above this high here, then I'm going to be back on the, we're going to see new highs into the end of the year kick. Now, if somebody were here to tell me, we're here to say, I'm sorry, let me try to get my words. Okay, hold on, let me reprogram here. If somebody were to tell me here that, hey, this is just a correction in a downtrend, I wouldn't have a lot of argument for them. Okay, and here's why. We're back above the 200 days, so there's no way I can get bearish biased, but this is a short-term downtrend, and so far we're still making lower lows and lower highs. Okay, that changes if we get above this high here. Okay, and that doesn't mean we get above this high and we just zip it up. But for right now, okay, short-term downtrend, and we do have some resistance levels coming up, which I'll get to in a couple of seconds. And then we'll look at them. So for now, this is a short-term downtrend that started back here in mid-September. Now, that's the resistance points to watch. We have the 142.13 number. That's a gap fill. And we have 142.82, which is the 50-day moving average. If we get a retracement here, we also have the 78.6 fib of just this little swing down, which may not look important, but I mean, it was the last, it was pretty much the sharpest move in this decline so far, so it's got to carry some weight. That comes in at 141.80, so you got a little zone here, 141.80 up to basically 142.80. All right, and then if you want to throw a bigger fib on here, you have the 50% retracement is right where we closed at on Friday. And the 78.6 up here is 145.25. And then we have the 62% retracement of this bigger swing also comes in right at the 50-day moving average. So we have a zone here that we have to get through. Now, in my opinion, the most bullish move for the market would be a stall out into this resistance, a shallow pullback, or just a consolidation, like a sideways consolidation, build up some energy, and then break through. Now, I've said this in the live chat room a couple of times, but we are entering now what is usually a pretty good trading time for the market. Starting after Thanksgiving into Christmas is usually pretty good trading time. There's usually some good intraday volatility, some good setups across some of the stocks and major indexes. So this isn't the time to get complacent here. There'll be fund managers that'll be looking to make one more final push. There'll be people expecting the Santa Claus rally coming in, which is a tendency to watch. There'll be window dressing, and there'll be the January effect. So a lot of reasons, in my opinion, that we could rally. But again, if you told me, no, we're in a downtrend, I'm not going to put up much of a fight because we're still making lower lows and lower highs on the S&P. Here's the Dow, and the Dow just closed above its 200-day moving average. Same kind of deal. I want to key more off the S&P, the NASDAQ, and the Russell. Here's the NASDAQ, not quite at the 200-day moving average. Above that, there's more resistance at the gap at 65.46. And then if we were to get up, which is right actually the 200-day moving average, so I didn't look. I thought it was a couple. Thought it was maybe 20-cent difference. There's only about a 1 cent difference at that point. And then you got the 50-day moving average up here at 66.71. Again, a downtrend, and this is a pretty sharp one compared to what we saw on the S&P and even the Dow. Now, the Russell right into the 200-day moving average. So again, we got to buzz through this. We might, as the NASDAQ tries to get up to its 200-day, but like I just said, I would like to see a pause into resistance, a minor pullback or consolidation, and then see if they can get through to go to higher prices. But again, I want to be clear. If you're going to tell me we're in a downtrend, I'm not going to argue this with you. The only reason that I'm not biased to the downside is that we're over the 200-day moving average on the SPY. We're below the 50-day, which keeps me neutral. But like I said, if we get above that, my opinion will change. Let's take a look at some of the indexes here. Semiconductors, watch the 50-day moving average, came into play a couple of weeks back. See if that's resistance there as well. Possible testing is done of this low. You can see here we have a higher low and now maybe another higher low. This could be a short-term low here, but really got to get above here, and of course above the 200-day moving average, very important. Clad tanker, watch the 20 EMA. Intel, okay, trying to get a bounce here on Intel, but now it's below 20, and I really thought they would try to come in and defend it at 20, and they really didn't put up much of a fight here. So this is pretty nasty, and definitely has to be watched. Still a bellwether. Definitely keep your eyes on it. NVIDIA, back to the 20 EMA. See if that comes in as potential resistance. Whoops, got to do the index first. So here's the banks, and the banks look like they want to head to their 50-day as well. They got a nice test here. I never really consider this breaking the 200-day, and I know some people will argue and go, well, it did close below it, but you really got to move away from it. And the SPY, I think this was a break. Okay, but now it's right back above it. But the banking index, I never really felt that this was a break. Okay, and I believe I mentioned that. And now we're coming up, watch the 50-day moving average. Bank of America, looks like it wants to retest the highs up there. Citigroup, look at this little coil here. Okay, if the banks can get moving, this is one I definitely want to watch. I love when we see these coils because you can really map out your risk reward here, right? If it goes higher, then you just want to watch that 50-day. And if it goes lower, you just want to watch the top of this. All right, but if this can break out here, it could get a retest of those highs up there. JP Morgan, Doji at the 50-day. It's got to get through it, otherwise it could come down, maybe retest this low down here. Broker-dealer index, here we go. Back to the 50-day moving average, see if it can get up there. It's really been in just a sideways consolidation here, but it has been under the 200-day since it broke down in May. So that's got to get going. Here's Goldman Sachs above the 50-day. Good start. Okay, nice little 3-bar pattern here. Got above it. See if it can keep going. Here's Morgan. I'm trying to hang on for dear life at the 200-day. All right, I mean, and again, I like this type of setup because you know where you're wrong right away. Right? If you're looking for this to bounce and it breaks the 200-day and this trend line, then at least you could say, hey, you know what? All right, I'm wrong. Or if you take it to the downside on the break, you can have a tight stop up there. I don't, when I say I like it, I don't like it because it's a 98.6% probability. No, no, that's not why. It's as a trader, I always want to see where I'm wrong as quickly as possible. All right, it makes it easier for me to lay out my trading plan. It makes it easier for me to trade. Don't confuse that with saying trading, it makes it an easy trade. It's not. Trading is difficult. But what it tells me is what? It tells me, okay, hey, this is set up right now, and I'm looking for it to go one way or the other, and I know very quickly if I'm wrong. That makes it easier, okay? Not sitting there going, well, you got to give it these moving averages, like on a stock like this. I'm not saying this is set up. This is more just a choppy mess. But if I buy it here, I got to use the moving averages, and then I got to go to here. Or why don't I just put the stop here? But, you don't want to stop out here because then you got support here. No. But if it's support here, should we? Well, yeah, you might as well put it there. I mean, you're going to have to pick a spot eventually to put it down. Right? And look, it's easy to just sit there and say what on this? Okay, it's broken. All right, just put it there. Okay, but it really sucks if it breaks, goes right to here, and then comes back up. So just something to keep in mind. That's why I like those kind of stuff. Okay, cyclicals back over the moving averages. Okay, that's a good sign for now, but it really got to clear this. This is the most important. But I think if we clear this little short-term double top, I think the cyclicals are going, and I think that's going to help fuel the S&P as well. XLB got above most of its moving averages, still got to get above the 50-day. Stuff like Caterpillar, sitting there, not really interested there. John Deere, yeah, I mean, still in a bigger picture range for the most part. How about healthcare? Yeah, healthcare dipped below the moving averages, but came right back down. I think I said this is more choppy than anything last time, and I still think it is. Here's Aetna. I mean, this is a pretty nice bounce so far, but see how far it gets, see if it can get to those highs or not. How about the home builders? Also, what a nice loop-de-loop there. I mean, up a quick 10+%, right, on this. Let's see, what was the low on this? I think it was below 150, right? So, yeah, a little bit below 150. So you got, 10% on this. What a loop-de-loop on that, right? To say the least. BZH, stalling out. See, this is the kind of stall out I'd like to see on the indexes. Of course, I'd like to see this kind of stall out and then a push through. All right, that's BZH. Here's Toll Brothers. Watch the 50-day moving average here if this keeps going. How about gold? Yeah, gold broke out on Friday. Whoops. Sorry, that's gold, the actual stock gold. I'm talking GLD. It was hanging around here, formed its consolidation. And I mean, here's a tip. Here's a trading tip for you. Watch these for these types of consolidations to set up. Or set up here, beautiful breakout. Set up here, beautiful push up through the 50-day. Will it get all the way up there? We'll see if it has enough momentum to do it. Look at silver. Nice push too. All right, oil, yeah, just sloppy. Got the 50-day above. Got these lows give way. You should test those lows down there from June. Exxon, okay, trying, maybe can get to the 50-day moving average. Conoco, trying, maybe that can get to the 50-day as well. Chopping around. Okay, some glamour stocks. Google coiled up right under the 220 EMA. This is what I'd like to see too. For the this is the type of pattern I'd like to see. All right, see how it's caught up. Now I'm not telling you Google's definitely ripping higher here. It's not what I'm saying. But what I'm saying is if and this is really nice. A nice bounce off the 200-day, and now it's just kind of coiling up here. But what I'm saying is if we're going to go higher, these are the type of patterns that can, back the fuel truck up, right? That can get the momentum going. The gerbils can spin the wheels and get going there. Amazon, the gerbils. Are they hamsters or gerbils? I don't know. All right, whatever. It's the little mouse that runs on the freaking wheel. All right, Amazon, 50-day moving average. See if that holds. Could have a possible lower low W here. See if the 50-day can hold up there. Apple, all right, coiled up as well. Looks a lot like Google. All right. Let's see. I got something like this, something like this. Okay. There you go. There's the coil right here. Watch the 200-day up there. It's about 26 points away. All right. Baidu trying to start something here, but I'd really be watching that 20 EMA for potential resistance. Priceline. Yeah, sloppy here, but testing the 200-day. See if it can get above this. Maybe it'll go up for that gap fill, but more sloppy than anything. CMG, this looks corrective. I'd be real watchful of this 50-day to see if it comes in as potential resistance. RIM through the 200-day. This was a beautiful base breakout. Nice coil right at the edge of the base, and then boom. This thing is going, and it's on a nice little move. Watch to see if it can hit the 15 number in this area, in the 14s up to 15. Okay. How about Visa? We looked at Visa last week, had the bull flag. Yep, poked out of it. Nice. Watch 150. MasterCard, nice consolidation here. See if this one could go as well. American Express, watch the 50-day and the 20 EMA. Potash, okay, test the lows. Watch the 20 EMA as potential resistance. Here's Win. Watch these moving averages. Possible trouble. Las Vegas Sands, got to get above the 50-day. Then you got the 200 right up here. So that's really it. Again, all right, this is a really nice bounce so far, but short term can be argued and very easily that it's a downtrend, lower lows and lower highs. Got a zone of resistance starting right about where we closed on Friday up to just over the 50-day at about 143. So this is a zone here. I'd like to see some sort of pause here. Maybe it runs up early, then pauses or goes sideways, pulls back, whatever it is. Then I'd like to see if that's enough to kind of pull the slingshot back and try to get us through, get some momentum to the upside. I am not back on we'll see these highs into the end of the year yet, but if we get above this high and of course stick, not just poke up and then fail, if we get above this high and stick, I will be back on that bandwagon. Have a great weekend. Feel free to contact me, tiny@stockmarkettrendsx.com. I will speak to you in the daily email or in next week's video.